4. Coordinate month-end processing to ensure timely completion. Introduction.
Accounting teams should review the monthly closing process, develop a checklist of tasks to ensure it goes smoothly and correctly.
Daily.
Month-end close is the process of collecting and filing all financial and accounting information for review, reconciliation, and reporting at the end of each month. Their books are closed so that the records are set in stone. Always have a record of daily operational transactions, ideally the moment they're made rather than waiting until the end of the month. For example, if an accounts payable team fails to become involved with the purchasing process on time, it will have to play catch up at the end of the month to issue all those missed payments and double check the backlog of documents and invoices.
Checklist.
Cash. Adjust for any outstanding checks or deposits until your ending cash balance matches what the bank statement says. Deposit any undeposited funds from the prior month. Inventory and fixed assets. Properly document depreciating value and outdated/expired inventory. Not everything of value in the organization can be set to a cash amount. Fixed assets, which can include equipment, property, and vehicles, add long-term value to your business. Keep in mind that they may depreciate in value over time. In a similar vein, perform an inventory count every month as part of the close. Are you in need of replenishing stock? If so, how much? Are any items perishable or need replacement? Accounts payable and receivable. Look for unapplied credits or past due balances to write off. Notes payable with the bank. Consider amortization schedules and properly document the cost of monthly interest. Intercompany accounts, payables and receivables should match between both businesses. Check for prepaid expenses too. Accrued vacation and payroll, for employee reimbursement. Accrued taxes, including those that apply to property, sales, and payroll. Expenses, including supplies and maintenance costs. This checklist does not have to be completed in order. In fact, some tasks might be delegated to another department. Identifying task dependencies will inevitably be an additional step for larger organizations.
Reconciliation. Reconcile.
Reconciling all your accounts is a main step of the closing. Cross-check your account statements with your receipts, bank forms, and other outside entries. Accounts that need this treatment are cash, checking, and savings. Prepaid accounts. Other balance sheet accounts. Petty cash. Petty cash. Reconcile your cash accounts first, which are easier to process since discrepancies and mistakes are apparent when you're dealing with cash. School district, Lee sandwiches.
Dry up financial statement.
The mere act of going over your financial statements can give you intel into what you're buying and whether you're getting a proper return on your investment. They are also an indicator of overspending and other budgetary issues.
Prepare for the next closing.
What have you learned over the course of this process, and what can you apply to make next month easier? When you get a fresh start next month, dedicate yourself to building a financial calendar to keep up with the books. Write down deadlines for collecting all the transactions, the receipt and recording of new reports, posting all income and expenses, a general timeline for adjusting the ledger. Communicate your plans to other team members involved in the month-end closing process to get everyone on board. You can tweak the calendar as time goes on to fit it around your schedule.
How?
Never sacrifice accuracy for speed. But remember to manage your time well. Slowly learn from mistakes. Make relationships with other teams, even those not in finance. Take advantage of automation. Calendar/raw data/elimination of manual data entry.